Let's start off talking about LVMH. They report later today. So according to you, the leather goods segment, that's really key to this report. It's where LVMH really gets its profit from. Of course, that includes the iconic Louis Vuitton bag. It's just like everybody knows that bag, okay? So you say the forecast is for 9% growth this quarter. You say if it meets 9% or even exceeds, that's a bullish sign for the sector. But tell me why, because in the first half of the year, they had 20% growth. So with that big drop off, why is that a good sign?
Yeah, sure. I mean, we all know that luxury sector right now, it's in the middle of a perfect storm with the slowdown in the consumer in the US. We had travel still very restricted globally. The Chinese consumer seems to be under pressure from many fronts. So clearly, we've seen a slowdown of growth in the sector, which I think, as you point out very rightly, the bellwether stock LVMH has come to reflect with that decline in the share price in the last 6 months. I think what the market or investors are looking for is understanding better whether we are closer to the bottom of the earnings cycle revision. I think things are likely to get tougher as we move into Q1 and Q2, simply because you have a lot higher comparatives. But I think forecasts are reflecting that. So I could bring to later today and more upbeat comments or more confident comments from the management, maybe in the conference call, could help investors.
Possibly, yeah, possibly. Looking at shares right now, they're down about 0.5% right now, Javier. Also, you say there's a divergence between soft luxury, which is like a Louis Vuitton bag, and I guess hard luxury, which is like jewelry. For example, Richemont shares, they're up 14% since their earnings last week. They own the Cartier brand and also Van Cleef and Arpels. Give us a sense. Why is hard luxury, I guess, or just jewelry, why is that doing so much better?
I think it's the result of not having enjoyed such a high peak through the pandemic boom. I think historically what we've seen is that hard luxury tends to be more cyclical than soft luxury. But I think this time is a little bit different in that soft luxury has enjoyed a much bigger peak than hard luxury, and actually may prove that this time in this slowdown cycle, the hard luxury may prove more resilient. And I think the numbers from Richemont earlier this month has actually supported that case. Okay.
I want to ask you something else that's related to Richemont, but I want to talk to you about the general luxury sector. In-store shopping. Richemont said in-store shopping was really a boost to the quarter. They opened up new stores in Ho Chi Minh City in Vietnam. They opened up a new store in Soho here in New York. How important is in-store shopping when it comes to luxury spending and these high-end consumers?
Very important. I mean, obviously, we've seen a migration of some sales to digital, but I think consumers, when they buy luxury goods, they still want to go through the experience, the shopping experience that only the brick and mortar can deliver. So I think, to your question, it's still very key driver of sales.
Javier, I got one more question for you. Burberry down about 25% since earnings. They said there's soft demand. They said soft sales in China were a big part of that story. You run the ETF, the LUX ETF. You got a number of companies in there. L'Oreal, Burberry's in there as well. How important is China to the entire luxury sector, whether it be hard luxury, soft luxury, alcohol, et cetera?
Very important in absolute terms as of today, and even more important in terms of the region being a growth driver. So the fact that consumers there are still under pressure or not showing, let's say, confidence to purchase the luxury goods, it's an important matter for the space.